Hello, I'm David Jones. Welcome back to another video on trading with Trading 212. We've talked quite a bit about market psychology and trader psychology and what makes trends. And in this video, I'm going to try and combine all three to give some useful strategy, maybe for those who are new or have only been trading for a short period of time. And what we're going to talk about are big levels in the market. I think a common problem that plenty of people have is, where do I place my stop loss? They might do a trade, so the market is doing maybe something like this. They decide to buy, maybe buying in here. They know they should place a stop loss because they've read lots of trading books and they've all said, manage your risk, manage your risk, manage your risk. But they're not sure where to place a stop loss. So they end up saying, okay, I'll have a stop loss down here. And then it gets very frustrating because the market might push up a little bit, only to fall down through their stop loss and take them out of the trade. And then the market goes on in the direction they thought it was going to in the first place. I think this is a common experience for lots of us. Now, it can't be eliminated all the time. But I think putting stop losses in maybe slightly better places is what this is all about when we're looking for big levels in the market. So we're going to carry on here for a bit, then I'm going to look at a recent real world example. So let's say this is a market. It doesn't matter what market it is, but the market has slid down to a level, and for the purposes of this, let's call it 100. And market psychology, market sentiment changes, and the market bounces. It then comes back once again, and what do we see? We see the 100 level holds again. So a level where last time round, investors, traders, whoever around the world thought, actually, down here at this level, there's some real value in this market, I want to be a buyer, has held again. And this is an idea that we see playing out time and again in financial markets. If you've heard people talk about levels of support or levels of resistance, it's these sort of things they're talking about. So support is an area below the price and resistance is an area just above the price. So if we're looking to buy in, then placing our stop loss the other side, if we're buying, of these big levels can be, and I would suggest is, a much more effective strategy rather than just licking our finger and placing a stop loss 10 points away. But let's look on the screen and we'll see a real world example, because of course it's all well and good going through a theoretical example, but unfortunately we can't trade in the theoretical perfect world. So let's take a look. This is the UK stock market index, the FTSE 100. So this was the example I used when we were talking about the trends video. But hopefully you get a feel, for how these levels are formed and how we can use them for placing stop losses. We know we should trade with the trend, and if we track this market over the last 6 weeks or so, it was a market that was clearly moving higher as time went on. The market would sell off. Of course, no market moves in a straight line forever. The market would sell off, but if you can see, the dips never really took out the previous major lows. So if we are buying into a trend like this, then we want to set our stop loss. Don't set it randomly, but set it the other side of a previous major low. And of course, the flip side applies if we're short selling a market. If a market is dropping and we're going short, we're selling first because we think we can buy back cheaper a bit later on. We need a stop loss on that trade. So pick a significant high that if the market gets to that level, you'd reverse that trade. So I think this is an area, looking at these big levels, that's a much, much better approach for choosing stop losses rather than just shoving a finger in the air and hoping for the best. We'll bring this one to a close for now, but if there's anything you'd like me and Trading 212 to cover in the future, please leave us a message in the comments and make sure to catch up with all our other videos on trading tactics and market psychology.